Bismillahirrahmanirrahim. Assalamu alaikum and welcome to another lecture. So today we are going to cover a topic that is professional code of ethics. But before that, sir, how about if we discuss something that what are professionals actually? What is the criteria based on which we call someone professional and we don't call someone professional? We call doctors, engineers, scientists, accountants, lawyers. We call them professionals. But some BCom pass, masters, or these kind of people, we don't call them professionals. But what's the criteria? So, the criteria is very simple. The criteria is 3E principle. 3E's principle. What it is? Number one, specialized knowledge, that I say experience, expertise. We accountants, doctors, lawyers, or anyone we're talking about, we call them professionals. They are the one who actually has the specialized expertise. We go through a very extensive curriculum or the syllabus of our field, and after that we have to pass a very challenging and difficult exams, right, which gives us the required expertise in the subject matter or the field. All right, then we have a mandatory training requirement, all right, in our field, which gives us the experience. All right, and then the code of ethics is applied on us, and we have to comply with the ethical values and the ethical requirements. So these three E's, expertise, experience, and the ethics, they actually make someone the professional ethics professional, right? And sir, okay, if we have to apply to the ethics, this is covered by our syllabus or our papers, this is by training, then what about the ethics? So, for the ethics, the qualified or the professionals people, they have to understand the professional code of ethics and they have to comply with it. And that is what our today's topic is all about. So the ethical code of ethics or the professional code of ethics, what do we mean by this? It consists of the fundamental principles. The fundamental principles are the pillars of the ethical values or the professional ethics, which we have to comply with, right? If any of these pillars goes down, the ethical values will be compromised. What are they? Number one, integrity. Number two, objectivity. Number three, professional behavior. Number four, confidentiality. Number five, professional behavior. Let us understand each of them one by one. All right. So, integrity means honesty, straightforward, and truthfulness in all your dealings. All right. If you're dealing with anyone, internal, external, junior, senior, your boss, your junior, your colleague, everyone, you have to be truthful. For example, um, let me give you the example of financial statement. When you make the financial statement, it is the requirement by any law and regulation and the IFRS or the auditing standard that financial statement should give the true and fair view of the financial statement. So it is your responsibility that you disclose all the correct information in the financial statement. They should be straightforward, they should be honest, they should be all truth, no lie, no false information. You don't need to make things complicated for the people to get misguided, to get misleaded, right? You have to have it crystal clear and everything, straightforward. For example, if in your company there is a losses, so you have to show the losses that okay, we are having a losses. You have to be truthful, right? You don't try to make or convert these losses into the profits by recording the additional revenues, by reducing your cost. No, in actual, if you are reducing it, it's fine, but if you are reducing it by fraudulent financial reporting, you are deliberately not recording the cost, you're not reporting them, that's wrong, right? You're not reporting the impairment, you're not reporting the some contingent liability, some provisions. So this is how you mislead the financial statement, right? You misstate them. And not only this, the integrity asks you to, you are not supposed to conceal any truth or wrong as well. For example, let's say the financial statements are made, all right, the financial statements are made, you did not make it, all right, but you come to know that this revenue is not correct, it is wrong. All right, the revenue number is wrong. You come to know the truth, and you said that okay, if I am not making the financial statement, and no one is asking me, I am not supposed to tell it. If someone will ask me, I will tell them the truth. Okay, this revenue is not correct. But if someone is not asking me, I don't need to report it. All right, or I can conceal the wrong thing. No, it's not allowed. If you are thinking that my responsibility is to tell the truth when I am asked. No, you are saying that if no one will ask me, I will not say truth. No, it's wrong. You have to tell the truth where it is supposed to. For example, if you are seeing someone doing wrong thing, all right, if you have seen someone doing wrong thing, and you are saying that okay, I will not report it. I'm not lying that he did not commit the wrong act, or he did not commit the fraud. All right, I will not lie, but also I will not report it. All right, so that's also wrong, because in a situation where you are supposed to tell the truth, you stayed quiet, you stayed silent. That's wrong. Integrity is saying that also you have to be truthful, as well as you are not allowed to conceal the truth, or you are not allowed to conceal the wrong thing which you have seen. All right, you have to report them, you have to tell the truth. Then we have objectivity. Now what do we mean by objectivity? Let's understand this. So the objectivity means that you have to be independent. You have to be independent, and you should be, your judgment, your decision making should be unbiased. It should be unbiased. It should be fair. It should not be affected by any conflict of interest, and it should be based on the fact. All right, whatever you are going to do, whatever the decision you are going to take, it should be based on the fact and not on the assumption that the other person would be telling the truth. For example, let's say I'm saying that you are making a cash flow working, all right, and this cash flow working will be submitted to the bank for the loan, all right, and now um, this working is made by, let's say, your wife. Now, if you are going to review the working, will you be able to identify the mistakes? Because you have to go home again, right? And there is a relationship with your wife that you will never want to ruin, all right? So the ethics says that no, your judgment, your action, they all should be unbiased. They should be without any conflict of interest, right? For example, let's say you have one employee in your office who does all the thing perfectly, all the thing excellent, in an excellent way. That doesn't mean that now onwards you will stop reviewing his work, and you would say okay, that he's the very intelligent guy, he's very superb guy, he does everything correct. No, you should not be biased. That, for example, if the guy is making any working, and you are saying that okay, if this working is made by the Mr. X, and he is very superb person, he does everything right, okay, it would be fine. No, you should not be biased by the point of view that he always does thing right. So you have to be unbiased, and you have to be fair and look at the things, right? Then professional competence and due care. Let me give you one example. Tell me this thing, that in the big companies, are the shareholders running the business? Are the shareholder actually taking part in the business, and do they know the affairs of the company? No, sir, they don't. The regulator, do they coming to the company every day, and do they know everything? Your customers, do they actually know about the product ingredients, product information, product features? They all are relying on you. They all are blindly trusting on you. Don't you think that in this situation it's a huge responsibility of you on you, that you maintain your skills, your expertise, and your knowledge to the top level, so that you never let them down, you never do anything that is inaccurate, this is incomplete. All right, that's the responsibility, right? So the professional due care actually tell you this thing, that you should maintain your professional knowledge and skills to the top level, that if there are some new laws, regulation, standards, IFRSs, ISs, they are coming, you should always keep yourself updated to them, so that you can deliver the best services to your clients, to the customers, shareholders, regulators, and everyone, right? And not only this, since you are, the large public, and millions and billions dollars amount is, based on your decision making, the responsibility is on you. So you should be very diligent, you should be very careful in whatever you are doing. You cannot be careless, you cannot do something in a rash way, because everyone is relying on you. So that's the professional competence and due care fundamental principle. Then you have the confidentiality. Confidentiality is a very simple thing, that if you are getting some information which you would not get if you are not associated with the business or your duty. For example, if I tell you that, let me give you the example that I was auditing a listed company, all right, and my friend asked me that, tell me what is the profit of the company. Now financial statements are not issued on the stock exchange, results are not public yet. I am the auditor and I know the information. My friend asked me that, please tell me how much the profit company has earned. If it's huge, I will purchase the shares because share price will go up and I will have the advantage. All right. So do you think that I am allowed to give this information to him? The information which is not available to the general public, and the information which would not be available to me as well if I was not the auditor. So that means that I am getting this information only as a privilege of my duty, of my job. So it is my responsibility to safeguard the privacy of the information, privacy of the data which I am getting in terms or in relation to my duty. This is not the data which I can share with anyone, because, and also I cannot use it for my personal gain as well. Okay, I'm not sharing it with my friend, but I go and buy the shares myself because the company is profitable. No, you cannot use it because everyone doesn't know about it and you know it. So that's something privilege which you have because of your duty, because of your job. So you cannot gain the benefit from it, and that's the confidentiality principle, that you should not use the confidential information for own or others benefit. All right, or you cannot even disclose it that you are not using for the benefit, but you give it to someone. Okay, if you want to have a benefit, have it. No, you are not allowed. All right. Professional behavior means that your behavior should be professional. So what do we mean by this? It means that you will never do something that will discredit the profession, because if you are doing something wrong and the public come to know about it, it is not that only you will be defamed. It is not that only you will be discredited. It's your whole profession will be discredited. All right, whole community will be discredited. So you should not do this. All right, and you should always comply with all the laws and regulation, because if you are not complying with laws and regulation, which kind of ethical person you are? All right. So if you are doing any of these things, if you are not complying with any of these things, you are not integrate, you are not objective, you are not keeping the professional competence and the due care, and you are not uh, considering the confidentiality. In all the scenarios, the professional behavior will be compromised, because if you are not complying with any of the fundamental principle, that means that you are not complying to the professional behavior principle. All right. So this is the five fundamental principles of the ethics. Now let's move forward and see some more content that, in real life it's not that easy to comply with the five fundamental principles, because if it was that easy, why we are studying it, right? Because in real life there are some situations which create the threats, which creates the challenges, or which creates the dilemmas, the difficulty for you to choose the side, that which side you should go, which thing you should do. And these are the situations which actually creates the difficulty for professional to comply with the professional code of ethics. And what they are, these threats or dilemmas are: number one, self-interest threat; number two, familiarity threat; number three, advocacy threat; number four, intimidation threat; and number five, self-review threat. All right. So these are the threats which arises in the different scenarios, different conditions, which actually challenge you, which actually try to stop you from complying with the fundamental principle. Let us see them. Self-interest threat. In what condition they arises? Arises when there is a financial interest, when there is a close business or personal relationship, when there is involvement of the gifts, contingent fee, unpaid fee. Let me give you the example. That, for example, you are the accountant of the company, and the bonus will be given to you if the company crosses the profit target of 1 billion. All right. Will you record some transactions which will drag this profit down? Will you record the losses? Will you record the impairment on the property, plant and equipment? Will you record the impairment on the inventory? All right. Will you record the impairment on the goodwill? um, will you going to record the foreign currency exchange loss or not? Because if you are going to record these things, it will have a impact on your financial interest. Your financial interest is bonus, because if you will record the losses, if you will, for example, there is a thing that you might commit the fraud by overstating or recording the revenue, additional revenue which has not been realized. For revenue, we have to make sure that the performance obligation is satisfied, and if the performance obligation is not satisfied, you cannot record the revenue. But in order to meet the profit target, you deliberately recorded some revenue that is not realized or occurred yet, so that the company achieves the target, profit target, and you get the bonus. So this is the financial interest that can cause some challenges or threats over your integrity, your objectivity. All right. Close business or personal relationship. Remember about the relationship about your wife. If for example, if anything, if for example you are on the board of company, right, and you found out that your wife was, let's say, CFO, and she committed something wrong, and you come to know this, will you report this? That's a challenging question, because now you have a close and personal relationship with someone. Because the ethical principle are saying that if you have found out something, report it, be truthful, be honest. But you also have a close and relationship with your wife as well. So these are the situations which will cause difficulties for you. If you are getting, for example, there is a client which gives you the huge gifts, the valuable monetary gifts, and then this client is doing something illegal. Will you be able to report this client to the law and regulation? No, sir. There would be some question. You might not do it because you are getting the huge and lucrative gifts from the clients, right? So these are the things which creates the self-interest threat, because that is your interest, your personal interest, financial, close, or personal relationship, or you're getting the gift. Or for example, let's say you are a valuer of some company, and company came to you that I have the investment property, all right, and I need to value it. And you are the valuer of the company, like a regular valuer. From last 2 years, they are getting their property valued from you, all right, but they have not paid the fees since the last 2 years to you. Tell me one thing, that what are you going to, for example, the value of the property, plant, equipment is very low as per the amount which is already recorded in the books, which are recorded in the financial statement. So for example, the property is recorded on 100 million in the books, and you found out that the value of the property is now 50 million only. Will you be able to give this report, valuation report, that the investment property is only 50 million now? No, sir, because you know that if you will report this thing, there are chances that the company will not pay you the previous fees as well, because they will sustain a huge loss. All right. So these are the things which actually create the doubt. Unpaid fees or the contingent fees. That, for example, the client give you this condition that if you will report the value of the investment property above 100 million, we will give you 10% extra fee. So again, now what do you think? You will be induced. Your judgment will be compromised, that you will try to report the value above 100 million, so that you get the 10% bonus or additional fee. This is called the contingent fee. So the self-interest threat arises in these kind of situation, which stops you from complying with the fundamental principle. Now then we have the familiarity threat. In the long family or personal or business relationship or association, it makes you too much empathetic or sympathetic for the person. And when you have a very good relationship with the person, you sometimes, if that person is doing something wrong, you don't stop them, you don't report them, and you don't interfere between them. Why? Because you care about your relationship. All right. You care about your long association, and you say that if I will report it, if I will tell them that they are wrong, maybe they will break the relationship with me. Maybe they will stop the, or they will cease the association with me. For example, there is a client, there is a long standing client that has been involved with you. For example, you are giving them the tax advisory services, and the client comes to you and say that I am thinking to commit a fraud, all right, and I am trying to do the fraud and save my taxes, and you have to help me. Now, will you say no to your long standing client who is giving you too much fees, or you will say yes? Again, that's the challenge. That will be a very difficult challenge for you as well, right? So that's how the familiarity threats you. If there is any long association with someone, for example, you, Mr. A, and Mr. B, you both are colleague and you both are working in the same office, and Mr. B is committing a fraud. Will you tell the upper management that Mr. B is committing the fraud because he is a very good friend of you? Sometimes it happens that because of the friendship you don't report them. All right. Then the advocacy threat. Advocacy threat means that when you are becoming the advocate of someone, I always give this example that in court there are two lawyers. All right. The one, for example, there is a killer, and there is a person who is killed. All right. Both have the lawyer, and we all know that one person is wrong. In court, obviously, if there are two parties, one party is wrong and one party is correct, but still don't both have the lawyers. Don't you think that in that situation, the lawyer of the killer, he also knows this thing, but since he is the advocate of that person, he will support him, and he will say false or lie for him. He will compromise his judgment for him. He might not comply with the professional behavior as well. Why? Because he is the advocate of that person. So the advocacy threat arises when you are advocating someone. So see, promoting the employer position to the point that the accountant objectivity is compromised. For example, you your company has done one accounting treatment, all right, and you are the advisor of the company's you are the advisor of the company. So now you have to defend the position of the company. So now you will do everything to defend the company's position, but hold on, if you find out that the company is wrong, then what will you do? Now it will be a challenge for you to accept this fact that the company is wrong and you are advocating for the wrong party, and you have to tell this thing to the company that you are doing wrong and I cannot advocate you in this thing further. No, that's a threat, and that's a challenging thing. Then intimidation threat. Intimidation threat means actual or perceived pressure or undue influence. For example, you are the accountant and you are reporting to CFO, and CFO is saying that you know do the fraud in the financial statement and record the revenue, additional revenue which you should not be recording. All right, that is not as per the standard. Record the additional revenue by 1 million. Now, the actual or perceived pressure is that if you will not record it, maybe your CFO will fire you. Maybe he will not give you the promotion. Maybe he will not give you the bonus. No, so there is the intimidation threat on you. All right, and it can be actual or it can be perceived as well. The actual threat is that the CFO directly says you that I will not promote you, I will not give you bonus, I will not, or maybe I will fire you if you will not do this thing, if you will not do this wrong act. The perceived pressure is that the CFO has this personality, or he is of such nature that that if he will not do this thing, he will definitely do this kind of thing. So this is the perceived pressure, and both of them are legit and both of them are valid, and they stop you from complying with the fundamental principles. Then you have the self-review threat. We all know that we are the worst judge of ourselves. So when you are reviewing your own work, you are never able to identify the mistakes. You are never able to independently review it because it's your own work. How can you say that I am wrong? And for example, if you did one working, or if you gave one advice to the client, and in future you come to know that it was wrong, will you be able to tell them that no, I was wrong? No, never. They will kill you. So that's the self review thread, that you are never in a position that you can review your work and find out the mistakes. So that for that it is very important that you have the independent reviewer who can review and find out the mistakes, or if there are any errors, in the your work performed, so that the integrity cannot be compromised, objectivity is also maintained, and ultimately the professional behavior is also maintained. Now we have some benefits of the of complying with the professional ethics. Let us look at them, and that would be the last topic of our today's lecture. So, what are the actual benefits of the professional code of ethics? What do you get by having the code of ethics? So, the benefits are that it establishes the ethical values. It gives you this fundamental principles, that these are the fundamental principles which you have to comply. These are our ethical values which you have to comply. It's documented and it is established that now everyone has to comply with them. All right. Then what we have the benefit that we are able to clearly communicate this thing, by through the code of ethics. It's a document through which you can communicate it clearly to all the people, all the employees, that these are the fundamental principle and these are our ethical values with which we need to comply. Then control the conduct of the employees through the professional code of ethics. You can control the conduct of the employees, that you can make it compulsory for them to comply with the code of ethics and not do anything that is against the code of ethics, right? In that way you can control their conduct and you can control them from doing anything that is unethical. All right. Then consistent issue resolution. This code of ethics actually gives you the framework or the guidelines which you have to follow, all right, in all the situation. So this gives you the consistent framework that in every situation or in any situation you have to apply it, and when everyone is applying it and everyone is following the code of ethics and the methods of resolution of the code of ethics, it makes everything easy and it makes everything standardized for everyone, and everyone will be making the decision based on the code of ethics rather than what they think is right, right? So you are not supposed to do what you think is right. Everyone has to follow the code of ethics and have to do consistent conflict or issue resolution. Okay, that's the benefit which you get from the code of ethics because of it, right? Then enhance the public trust, because if the public comes to know that this company or this business complies with the code of ethics, your the public trust in your company will increase. All right. It helps in acting in public interest, because you are complying to the code of ethics, as I was explaining you the fundamental principle as well. So all the things, if you are telling truth, if you are taking care of the confidentiality, if you are being objective, you are not being biased, you are maintaining your professional competence and due care, so by all these things you are actually safeguarding the public interest or the large public who has interested on you, right or not, right? Because if you are not complying with the ethics, the ultimate harm will be to large public, those who are relying on the information or your decisions. All right. So by complying with the code of ethics, you actually work in the public interest and you enhance the public interest and you safeguard them. All right. So basically what is sir public interest? So public interest, if I say that this person is working in the public interest, so what that person actually do in order to uplift the public interest, in order to safeguard the public interest, the person complies with the code of ethics. All right, that's the first thing, because if you want to work for the public interest, you have to comply with the professional ethics. You should be transparent and factual reporting, right? It is reporting. So when you are working in the public interest, your financial reporting or any kind of reporting or any kind of communication which you are doing to the people, it should be based on the factual data and it should be transparent. There should be no complication, no concealment of the facts. All right. You should not be involved in the fraud and corruptions. All right. You should always do the fair dealing with everyone, because you are dealing with the large public and you have to be fair and just and equitable for everyone. Then you should be independent, and the information which you are giving to them or your action which you are doing, they should be independent and reliable. So in that way, in that manner, we will say that we are working in the public interest. All right, or we are safeguarding the public interest. So these are the benefits of the code of ethics. This was the lecture in which we understood what are the fundamental principles, what are the threats which creates the challenge for you to comply with the fundamental principles, and what are the benefits of the code of ethics. I hope that I was able to clear this topic to you in a good manner. See you all in the next lecture. Till then, take care of yourself. Allah Hafiz.